think what we're seeing is not just a disconnect, but look, full employment has negative ramifications, right? Full employment means we're paying much more to get skilled labor, construction workers, et cetera. You know, we're just saying in the green room that even in the Hamptons, people are calling us and saying, I can't get a contractor to come fix X or finish out my bathroom or do anything because it's full employment. It's a problem.
So, I mean, but you need a good economy. I mean, consumers need to feel that their wallet and their bank statements are good enough to get out there and start buying, Jenny. And that's at least the bright side of full employment and wage growth that we've been seeing, right?
Absolutely. And specifically in New York, in Manhattan, because of the increase in mansion tax that was implemented July 1st, we've been overwhelmed in June. There were 47 closings above $10 million, which is about triple the amount of closings normally, because everyone wanted to avoid this new mansion tax.
Right. And I saw you guys just recently written up in the New York Post. It's just another day of these multi-million-dollar sales. And, you know, this is at least part of a problem. I mean, is this a bigger problem going forward, Dolly, this mansion tax?
We're borrowing from the future. So it will be a problem. So we had closings, for example, that should have closed in October. So they did everything they could to get, you know, TCOs so that we could close now. And it was, we've asked every buyer, close now.
Right.
We want to save.
Right, even if the apartment wasn't ready. You know, for example, Jeff Bezos, he bought an $80 million apartment, and just doing quick math on that, he saved about $2.5 million by closing prior to July 1st. So even the richest man in the world, you know, saving a couple $1 million.
That's actually a great example.
Yeah.
And, you know, over 2 million is over 2 million.
Yeah, even
right?
him.
Another thing that I read recently was that foreign buying has dipped, particularly Chinese buying, which was big here. What's with that?
Well, that dipped 36% last month alone. So it's definitely, it has to do more with the controls of China, you know, not letting people take their money out and all that usual stuff.
They also had the slowest growth in 27 years.
Exactly.
So maybe struggling a little bit.
Themselves.
Right.
Exactly.
Yeah, most of our buyers, I would say, are tech right now, but local tech, finance.
That's interesting, because that's an area that's growing, and, you know, regardless of the economy, our last guest was just talking about exactly that. Talk about the difference. I mean, I know this is a common question, the buying versus the renting, but what's interesting is that the millennials, some are really buying, but less so than our parents and grandparents. I mean, I think if you took a ratio of the population, they're not buying the way our parents and grandparents bought, right?
I think they are. They're just postponing it. So all the millennials we find are postponing marriage, are postponing children, are postponing house purchase. It all has to do with that postponement.
Right, and also, you know, millennials, our clients and my friends, we have multiple jobs. You know, our grandparents worked at GM for 30 years, and all my friends have had 7 jobs in 7 years. You know, so if you don't know where you're living, if you're living in San Francisco, New York, if you're not married, not tied down, there's no point in buying a home, especially a home in the suburbs, to be by yourself. You know, so it's a different.
My dad would be mortified if he heard me say 7 jobs in 7 years.
Oh,
and yet,
totally.
This is the way you're gaining experience, you're getting smarter, you're building your paycheck, and you're becoming more powerful. It is just a different generation. It completely is. What about refinancing? We got in the mortgage apps where we've seen those under pressure. I mean, everybody has been refinancing, but with mortgage rates so low, are people just, are they over it? They're so used to lower mortgage rates, they think they're going to be here forever?
I don't think they think they're going to be here forever, but the pressure to buy is off, right? Because what we see in the future is that mortgage rates will remain stable. What we see doesn't mean it'll happen, and therefore there's no rush, there's no urgency to buy. That is a negative of low mortgage rates. When there's rising mortgage rates, people want to buy to avoid the rising mortgage rate.
Get in now to avoid higher mortgage payments, which are huge for millennials. You're really penciling in those numbers, saying, should I rent or should I buy at the point, you know, you're married and are settling down.
And they're so data driven. I mean, they're so to the penny, your generation, even more so than the prior generations. The other thing is, how much do people put down these days to buy a home? I mean, has that changed at all? If you want to buy a home, I mean, how much do you need to put down?
Well, in New York, it's a very different market, but in New York, I'd say the average person is putting down 20-25%. But around the country, we're seeing people with 3%, 5%. Still, they can get those mortgages. So, it depends where you are.
That scares me. That makes me think of a housing bubble or, some sort of mortgages that get defaulted.
It could be, but they have good employment. So I think if you have good employment, you're saying to yourself, the American dream is alive and healthy. I want to buy. I want to pay myself every month.
What are the hottest areas that you've been seeing most interest, Jenny?
In the city?
Yeah.
Well, I would say, the West Village is always hot, but it's just so expensive. I would say the hottest area, if you want a good deal, is still the Upper East Side, where we're seeing a lot of deals happening now because people are trying to get in there, the Second Avenue subway, all the new restaurants and shops as a result of the subway. Right. But I would say the Upper East Side for sure is where I would bet on.
Yeah, and I saw that first-time homes actually over the years have actually increased in price too.
Yes,
That's the last thought.
Still continuing. And the other thing is around the country, we're seeing places that dipped a bit, Seattle, places like that are increased interest because it dipped. People are waiting for that dip. Okay, buy the dip, and it really happens.
Right. It's wonderful to see you
Thank
both.
You so
Thanks
much
for
having
coming
us.
in, and you can do some more investigation in the Hamptons for us.
Oh, great.
Okay, go right out there and check it out.
Absolutely.